Hello, everybody. I'm David Velez, Nu's founder and CEO. Welcome to Nu Videocast. I'm here today with Rob Livingstone, our new CFO here at Nu. Rob, welcome to Nu.
Thank you, David. It's great to be here.
So what have been the first impressions here after the first couple of weeks?
Wow. Well, it's just all about the energy and the talent. Meeting everybody here at Nubank has been a fantastic experience. Through the interview process, I met great people. And now that I've actually had the chance to land, it's been reinforced by the depth of talent throughout the organization. There's also just been the rituals that I've had the chance to get a part of. So, for example, meeting the finance team for the very first time, I had to bring brigadeiros because that's what you do when you meet the team. And then going through and learning the area and seeing how deeply people care about doing the right thing for customers and keeping the customer first at the center of every story.
Amazing. Well, I got to say also, I've heard a lot of feedback here from the different teams as they got to know you. They're super excited with you with these first couple of weeks and excited to figure out how we take finance to the next level. So, Rob, tell us, who are you and why Nu?
Yeah. So I am somebody who grew up all around the world. I've lived in 8 countries in my life, and I've worked in 6 countries. That makes me unusual in some ways, but I feel very normal here at Nu because we're such an international organization here. But just focusing on who I am from a professional standpoint, I spent the first 18 years of my life at Capital One, my working life. And at Capital One, most of that time, I was in the core credit space. I was working on credit programs, marketing campaigns, credit policy, collections policy, recoveries, everything that you can imagine that's in the core side of the credit ecosystem. And then I also spent 3 years in finance while I was at Capital One. Now, at Visa, I spent 12 years, and that time was almost evenly split between general management roles and CFO roles. My final role there was CFO of North America, which is Visa's largest business unit, and it was a great experience. And in both situations, I had the opportunity to do something that I was very excited to do at Nubank as well, and that is build things. So at Capital One, I built the Canadian business from 2 people in Toronto, a remote business, round out of Virginia, to 850 people. And then in Visa, I had the opportunity to build up the Chinese domestic market business from the ground up. When I first heard about this opportunity at Nu, when the recruiters called, I had never taken a call before in my time at Visa, but I have heard great things about Nubank from former colleagues who have worked here. I've admired Nubank as from my time at Visa, Visa was trying to win Nubank's business, and I saw the incredible power of the growth story and how much it had driven for MasterCard over the years. And so I answered the call, and it's been great ever since.
That's great, and it's interesting a lot of what you say about profile because it's a profile we look at for here at Nu. We find that this mixture of people that have seen scale or a level of scale that we are beginning to reach, but at the same time have this entrepreneurial bent inside the organizations and that have been across multiple countries tend to be a really good profile for us. As you say, we in the first team of 10 people at Nu, we had something like 6 different nationalities. So we've been a very international company since the very beginning, even though obviously we were started here in Brazil. So anyway, thank you. Super excited to see you coming in. So what should we expect of a new CFO? What do you think investors, stakeholders should expect of you as you come in?
I think the first priority here is continuity. Nu has been a great success story for the last 13 years. We're in a very, very strong position right now, and there's no turning of the ship that needs to happen right away. My mandate is to continue that story, but also to prepare us for the next stages of our growth evolution, how we internationalize, how we sort of move beyond our core markets. With that being said, my focus right now is really Brazil. That's where I'm spending most of my time for the first 6 months, is really deeply understanding the market.
No, that makes sense. And one of the parts that maybe are hardest to understand for investors and perhaps the critical aspect of our business model is credit. Maybe tell us a little bit about how familiar this credit methodology is as you come in and you see the way we think about credit, the way we do analysis, the way we're organized as an organization. There is this sense at times from investors that if the CFO or the CEO suddenly wants to grow more to show investor growth, they can just do that. So tell us a bit about like what's familiar, and maybe even explain a little bit like how we're organized to make credit decisions, and what is the function of finance in that role.
Sure. It's a very familiar world for me in terms of our principles and our practices. And then there are areas where Nubank is stronger than anything that I've seen in the past. And I'll talk about those as well. So in terms of principles and practice, the way that we make credit decisions is we make integrated decisions across revenue and risk. What is the revenue? What is the profitability we're going to be getting for a certain risk profile? And we have to be able to be happy with that level of return that we're going to be getting. Now, these decisions are made through a credit approval process that has credit officers and senior credit officers who review decisions and ensure that these are actually going to produce the results that we expect. We have a second line credit risk management function that essentially looks over the shoulder at all of those decisions and ensures that they're going to perform in line with expectations. And of course, we have a third line audit function to just make sure that the entire process is working properly. Now, there's another element here that's very familiar to me, and that is the level of resilience that's required in every credit decision. On average, we require that any specific credit decision continue to be profitable even if losses double. This is based off of 50 years of experience here in Brazil in terms of what the profile has looked like of consumer credit during recessions and during downturns. And this discipline is pervasive throughout the organization where credit decisions are made. The other dynamic is that when we enter a new segment or when there's something that might be riskier than we expect or unknown, we will stress test that even further, right? So that we've got that extra buffer and ensure that profitability is going to happen. Now, this is where actually Nubank is doing things that I haven't actually seen before, and this is demonstrating it so many times over such a short period of time. I was actually surprised to find out that over the past 12 years, we've gone through 4 credit cycles here in Brazil, including the deepest recession in living memory. And Nubank has come through all of those with this credit model intact and performance, as you know better than I do, very strong throughout that entire period.
That's actually really interesting because I don't think people in the US or international investors appreciate that point, which is I remember in 21 when interest rates in the US went up a lot of questions from investors saying, so what's going to happen to your business when interest rates go up? And my answer for them is we've only seen interest rate going up, right? In Brazil, while the US does one cycle, we see several cycles in Brazil. And so financial services companies and banks have to be anti-fragile to the point that they have to be good and have a profitable business model operating in every single cycle with high inflation, with low inflation, with high interest rate, with low interest rate. And that's exactly what we've been able to demonstrate over 13 years. So talking about cycle, there is a lot of conversation from investors or from the market around, is Brazil coming to a cycle? How do you think we are prepared for that potential cycle? And there is a lot of conversations about you not being Brazilian and you haven't worked in Brazil, and how are you going to be able to manage the finance function of a company that has significant exposure to Brazil if you don't have that knowledge or that experience? How do you think about that?
Those are 2 great questions. And so let me address each of them in turn. The first one, which is really around our resilience and how do we ensure that if there is a cycle coming in Brazil over the next year or 2, that we are well prepared. And that's everything that I was just talking about in terms of our DNA, how we make credit decisions, how we've made credit decisions over the last 12 years. It will drive our performance in any sort of downturn right now. We are resilient. It's in our core ethos as a credit granting institution. But as far as specifically understanding the Brazil market, I've just been so impressed by the team that I've encountered here. The finance team, of course, the shout out to the finance team. They're fantastic, but also the credit team here in Brazil and the leadership that we've got on the ground with Olivia Chanes, who is our CEO for Latin America and spends the bulk of her time on Brazil, with Roberto Campos and his deep background in macroeconomics, and Enrique Frageli, right? Our chief risk officer, who lives every single day that embodiment of resilience and finding and ensuring that we get to the point where we are not worried about a downturn. We're very focused on it, but we know that we've made decisions that will be resilient no matter what happens.
One aspect of our model that I don't think a lot of people really understand is that a lot of local banks tend to make credit decisions based on a bet on the market. They have a team of macroeconomists that have a view on the market. Market is going to do well, or the economy is going to do well, the economy is going to do bad, and based on that, you accelerate or deaccelerate credit. We have a fundamentally different approach to that, and I would call it pessimist bias. We're very pessimists in terms of how we make underwriting decisions, because by default, we assume that the future is always going to be worse than the past. And that's why we're not really timing the cycle. We are just assuming that the economy is going to do worse than everybody expects. And so credit models have to have that bias and that cushion in the way we make decisions.
It's exactly right. It's a natural hedge, which is fantastic to have. And sometimes you hear these stories about this idea that, oh, the best customers are booked at the bottom of the cycle. But it's very, very hard to time when that bottom of the cycle is. Nobody knows, even the teams of macroeconomists at other banks, they don't actually know when that bottom of the cycle is. But our approach, which is always about going as fast as we reasonably can, given our resilience expectations, will ensure that we are growing throughout any sort of economic cycle, but in a way that's very, very risk controlled.
One of the aspects about credit, but generally really about the entire company that we've been discussing a lot, and really everybody's discussing a lot, is AI, is applications of AI. And I think Nubank was perhaps the first financial institution in the world that published a research paper in January of 2025, already a year and a half ago, about how to use neural networks and foundation models applied to credit and to fraud. What have you found on those AI applications as you dug in, as you met the different teams using a lot of this technology? And what are the opportunities that you see for AI inside Nubank?
I think that the opportunities are legion, and I've been incredibly impressed by what I've seen so far. So the way that I look at it is that the AI models that we've created, Newformer and all the associated models that are built on that data foundation, fundamentally help us in two different ways. The first is that the power of the AI models with increasing slope of the credit curve help us grant more credit at the same expected loss rate, or at the same expected level of credit granting, get a much lower loss rate. It's got a win either direction because the model is more powerful. That's the key benefit at the beginning. The second key benefit is that the speed of turnaround of model iterations now is unlike anything that we've seen before. Something that would have taken 3 months in terms of model validation, testing, revisiting on different historic sample sets can now just take 7 days. Now, that's incredibly exciting in terms of the power and the speed that AI brings to our credit business, but it doesn't actually change our fundamental ethos that I described earlier around lines of control, but also having a human and human decision-making, reviewing every model, reviewing the output of the testing, and ensuring that we're still adhering to that same formula of focusing on risk-adjusted returns. That's absolutely critical. The other place where AI is incredibly exciting is just within the finance function and how I'm looking at it and what my team is bringing up in terms of the accomplishments that we've had so far.
No, you're totally right. And there's so many things to get excited about, obviously, the technology. Starting from when you think about the foundation models, I remember we began already at a significant advantage versus traditional banks in underwriting. While some of the best incumbent banks were churning models every 2-3 years, we were already doing it every 6 months or 9 months. But one of the things that was frustrating, even already using machine learning, was how much time we had to invest in feature engineering. Every single feature in the model, if we wanted to test income, if we wanted to test the type of device that the customer has, if we wanted to test age, had to be a feature that had to be engineered, and that took weeks or months, and that took teams. The moment we went and released our own foundation model, and the fact that everybody in the organization was able to consume that foundation model with effectively all of the data that we have available from over 135 million customers, then the speed that added to the process was impressive. So this is super exciting. And also when the cost of trying something new becomes so much lower, then you can try so many different approaches. You can test and learn your way into so many different ideas that it always is hard to test.
Yeah, that's entirely true. And it's not just credit models, it's the revenue models, it's the operations models that we have. Everything that requires judgment and decisioning internally can be enhanced through AI. And David, you also talked about how important AI will be for developing our market-facing products in the future. This idea of a private banker in every pocket. How would you describe that to the group?
Yeah, no, I'm always very excited about what AI means for how the entire organization gets reinvented and how we can effectively do something that is magical, which is we can be faster and higher quality. Historically, all organizations are used to see trade-offs. We can do both. We can be faster, more efficient, and produce products that have higher quality at the same time as we operate an organization. But also from a customer-facing perspective, this is going to be a full reinvention of the user interface for customers. And we exist because we took advantage of a technology shift as smartphones started to penetrate significantly the Brazilian market. And suddenly you could imagine somebody having a bank in your pocket with a smartphone app. That seemed crazy only 15 years ago, that people would actually going to save in a digital bank. I remember a lot of customers saying, that makes no sense. Like, why? That feels so unsafe. Where's the banking branch? I need my physical cash. I need my physical money in my pocket. We are now the largest private institution in Latin America, and you won't find a single vault in any of our offices with physical cash, right? So we took advantage of the user interface to significantly increase access to financial services. And what AI now enables is the next shift of user interface to enable access and advice. Because one of the things that the digital access hasn't really solved is there is no real financial advice or financial education. People might have access to the system, but they don't know how to use the system. They don't know how to optimize the system. And if you have somebody that can grab your hand and tell, Rob, let me tell you how to optimize perfectly every single hard-earned real that you make, then the potential of wealth creation for our customers and for society is going to be gigantic. So we're very excited about continuing the mission of inclusion, but augmenting that mission with the potential of intelligence, of that intelligence can bring to financial services in our geographies and really globally.
Yeah, it's really, that's one of my first impressions as well that I've had of the company, is just this relentless customer focus. And let me give you one anecdote of what I heard. And that was where we had a customer segment where we could either offer this customer or prompt in the customer in the app to take on a credit card or a consumer loan. And I was like, well, which one should we offer? And the response was, well, let's let the customers choose. And that's just magical, right? It's this idea of empowering every single one of our 135 million customers to make the choice that's right for them. But then that choice gets even stronger if they've got the advice from an AI private banker on their phone, helping them understand which choice is going to create the better financial outcome.
Yeah, super exciting, the opportunity. One of the other opportunities that we've discussed very publicly since we applied for a banking license is the US as a market. And this is another area that investors, I would say, are skeptical in general, as we talked. And I also mentioned repeatedly how this skepticism reminds me a lot about the skepticism we suffered when we launched in Brazil, where out of the 30 conversations I had with investors and CEOs locally, everybody said, forget it. There's never a startup will be able to challenge these gigantic institutions. Reminds me a lot of the skepticism we had when we launched Mexico, the same when we launched Brazil, and here we said Colombia, and here we are again. So couple questions. How do you think about the US as a potential opportunity for Nu, without necessarily getting into a lot of details because we haven't publicly described exactly what our strategy is? And also from a capital allocation perspective, I think one of the concerns that investors have is, are we going to bet the house, right? Is this a bet the house moment where we go all in? Or how do we think about, or is this a bet? How do you as a CFO bring a discipline monitoring of that bet specifically?
Those are two great questions. Let me start first with why the US is a very attractive market for new, and then second about how we're going to take a very disciplined approach to entry and why that's important. So first, the US market is the largest financial services market in the world, and it's one of those environments where not everybody is well served, and US banks in their retail banking businesses are earning very, very healthy ROEs. There is clearly an opportunity here for a low cost, very efficient provider like New to come in with great products, great services, win customer love, and take a share of the market. Now, because the US is so large, we don't need to take a huge share in order for this to be very meaningful for us. 5 million, 10 million customers in the US is as big as another country for New, and we would be very, very excited to make a difference in their financial lives. But from here to there is a journey. And what we are doing is we're taking a very disciplined approach to US market entry. What we have said publicly is that we are not going to be investing more than 100 basis points of our efficiency ratio in the US market entry over the next 2 years. And that's as we both establish our brand, ensure product market fit, and also really understand the credit underwriting that we're going to need in order to be successful in the market. The thing about our business, which you know as well as I do, is that to launch and to move at speed, you have to have a very, very strong foundation. The next few years in the US are purely foundational years where we're making a bounded bet on this idea that there could be tremendous upside for us. But we're not yet at that decision to push all of our chips on the table, as you've said. We're still at the position where we're looking at it, we're very excited, and we're going to be doing all the hard work that it takes to know whether or not that bet is going to come in the future.
I think one additional point that perhaps is not super readily appreciated is the fact that obviously this technology shift to digital enables the entry into new countries from financial services faster and cheaper. Historically, pre-smartphones, you needed to put banks in every single branches, so launch a new country was incredibly capital intensive. But there's a number of other additional technologies that enable that entry even more efficiently. One is the possibility to create a multi-country core banking system. This is something that basically every international bank in history have tried to do, and literally nobody have been able to accomplish because of the complexity of local regulations and local countries. We are very excited about the multi-country platform. We've always controlled our own technology. We never depended on third-party providers of technology or core banking systems because we think technology is a core thing that we need to own. And as we think about internationalization, definitely the US, we'll be launching our own multi-country technology platform. This is true for credit card, for lending, for collections, for savings. And additionally, there's a number of other technologies that are coming in that we think might be transformational to grow into new markets. So we think that why now? While historically there are a couple of bodies that have been left in the road as people have tried to enter the US as a market, we are very excited that there is a why now rationale for us to be able to do it right now.
Yeah, I think it also, and again, this comes back to team and talent and having that core. Chris Junqueira and the team that she's put together to lead this U.S. market entry has the right balance in my mind of really understanding the credit discipline that we need to have, but also that need to drive customer excitement and customer love. How do we start to do that from day one? Having that right team in place gives me a lot of comfort that even with that bounded bet that we're making, we're going to get the information we need to make that go forward decision.
And Rob, maybe what do you think is still the opportunity in Brazil, Mexico, and Colombia? So obviously, U.S. catches a lot of eyes, but when we think about where is the growth really going to come from the next 5 to 10 years, it's still our core markets. How do you think about the opportunity we still have ahead?
Well, I think I'm spending most of my time on our core markets, on Brazil, Mexico, Colombia, and especially Brazil. If I think about where the road map is for us over the next few years, it's about expanding our depth of customer relationships here in Brazil with additional products for customers. We've had a great history of increasing the customer product penetration here in the market, and we have the opportunity to add more on top of that over the next few years. We have opportunity to move into new segments here in Brazil. So, for example, going deeper into the small business segment where we already have 6 million customers, but there's more room to grow over and above that. Mexico is a very interesting story. We just got our banking license. We're becoming operational as a bank tomorrow, based off of the day that we're filming this conversation. And it can be as big as Brazil. Even though the population is smaller than Brazil, the per capita GDP is higher. And so when we look at the overall trajectory of financial possibility, it has just as much for us. Our near-term focus, though, over the next few years is about building on this banking license to launch new products and, again, ensure that primary banking relationship with as many Mexican consumers as possible. Colombia often gets left out of these conversations. It is a smaller market, but it's the same story, and it's a proof point that we can make this model work in multiple countries at the same time. So I'm also very, very keen to ensure that we don't neglect the potential of that one market.
And it's incredible. I mean, we have over 110 million customers in Brazil, but only 7% market share. So we could double or triple the size of Nubank just in Brazil alone. And when you look at sort of the cohort growth and how we've been gaining market share month over month, quarter over quarter, over the past 13 years, you can see how this is really even accelerating, even for credit card or first product. The number of the market share that we are getting in the market is accelerating. So it's interesting to just think that we're in day one in Brazil, and most of the opportunity continues to be here in Brazil. And as you say, I completely agree. Mexico could be another Brazil in terms of the market size, also especially because of the significant under-penetration of financial services in the market. Rob, so maybe a year from now, what do you expect to see in the finance function anew? What would be success for you?
So for me, success would be to help this company achieve greatness in the next year in the same way that we have in the past. It is fundamentally building on our success so far. Now, what I'd like to do as well is to make sure that we are ready for what lies ahead. And that means strengthening our platforms and our processes with AI in order to provide service for the rest of the company to launch more products and more countries over time as needed. I'd also really want to make sure a year from now that we would look back and say that we did what we said we were going to do. We kept our focus on Brazil and the opportunity here. We made the most of the Mexican banking license and the relaunch, if you will, of our Mexican business, and that we've made the bets on Colombia and the US and anywhere further afield in a very disciplined, focused manner. If we can accomplish all that, I would just be incredibly proud of what we've achieved. And how about from your perspective? What would you like to say a year from now?
Well, I mean, I think I'm very aligned to what you're saying. I think first and foremost, we are determined to be world-class in the use of AI and really reinvent the entire organization to be ready for this new technology and this new era that's beginning. We think is the most transformational technology in our lifetimes. And we see that as the superpower that is going to enable us to triple down in the consumer love we are being able to build with our 140 million customers, which means that's going to allow us to double or triple that. And also make sure that we're building one of the most efficient organizations in the world. And that also allows us to continue executing our mission in our core markets, successful entry into the US, and further internationalization beyond. So as we always say here in Nu, is day one, is the first minute of the first half. And we're super excited about what we have ahead. And to you also, welcome to the team and welcome to Nu. We're super excited to have you there and continue executing this great mission together.
Awesome. I'm so excited.
So that's it, folks. Thank you very much for joining us. It's been a pleasure. And I hope to see you next time in Nu Videocast. Take care. Bye-bye.